Leaders in both St. Louis City and County say they are prepared to fight the coronavirus. Mayor Lyda Krewson and County Executive Sam Page both held press conferences today to address concerns over the disease. Right now, there have been no cases reported in St. Louis City or County, but 20 people are being monitored for the coronavirus. Officials are going to be monitoring the situation along with the Department of Health and Senior Services, as well as the CDC.
We'll be prepared. We are a long way away from asking people to stay home. If we get to that point, we will implement our recommendations based on guidance from the CDC.
We are still waiting for results from the Illinois Department of Health about a patient who was tested for the coronavirus. If that person tests positive, it'll be the first case in our area.
Stocks fall again tonight in another wild day on Wall Street. It's the worst week since October of 2008, and this is all amid concerns over the coronavirus. Joining us now is Bob Ferguson with Millennium Financial and Julie Neiman with Smith Moore.
We want to break down what this really means for us. So Bob, we'll start with you. Coronavirus and 401k. If people are checking their retirement accounts, should they be? Should they be worried about what's going on right now in the markets?
Well, this is really an opportunity to reassess your whole investment picture, to look at your asset allocation, that is the ratio of stocks, bonds to cash. Look at that. If you're uncomfortable, you can rebalance it or talk to your advisor. I mean, these are the times to make changes, not to be afraid.
Not to be worried about the future.
Well, I mean, we don't know how this turns out, the extent to which it could become a pandemic or not, but we do know that stocks have fallen. Bonds are at a historic low. They closed at the lowest levels ever tonight. That's either a problem or an opportunity. I choose to look at it as an opportunity.
And so, Julie, when we take a look at the economy as a whole, what would you say about that?
Well, the economy is okay. That's the whole thing. Low unemployment, low interest rates, fairly good productivity. We're doing all right, and we're continuing to do all right. Can we go into a recession? Of course you can. You can talk your way into a recession. If everybody stays home in cocoons, we got a problem, because 70% of our economy depends upon the consumers. Now, a lot of that won't go away because Amazon can still drive by and throw things at your door, but nobody's going to be gathering out in large groups unless, of course, we win the Super Bowl or if we win, another hockey tournament or something, and in case we'll all go in masks and celebrate. But people will start taking precautions. But the key thing is caution as opposed to panic when it comes to actually worrying about the coronavirus. The market's another situation, though.
We've been on a pretty long run of good economic news going back about more than 10 years, I guess, if you want to look at certain graphs. But you're saying that the overall fundamentals are good. We've got this outside thing coming in that's affecting the market.
And the market is no longer a good barometer of what's happening in the economy. The market mechanism is broken and has been for 2 years now. The biggest problem is high-frequency trading. This has been around for some time, but it really picked up a couple of years ago where you had flash crash trading. You saw the market drop suddenly for no apparent reason. What the heck happened? Everybody make up some nonsense, but bottom line is the computers did it. This is a market that is untouched by human hands. The computers now are doing all the trading. They're triggering on bits of news here and there, data coming in. They work faster than, of course, any human could possibly do it. But that starts all these packaged products, indexes, exchange-traded funds spiraling down altogether. So like it or not, you're out of the market and everything gets trashed. Everything goes to the bottom.
Are people calling you worried?
We've gotten some calls like that, and the first thing we tell them, this is not the first decline you've been through. I mean, we had it wasn't such a stealth bear market last year. We were down 18% in 10 weeks. Last Christmas Eve of 2018 was the worst Christmas Eve since 1931. Everybody's forgotten that. And it was at that time it turned out to be a terrific buying opportunity.
Bob, Julie, thank you both for joining us. We appreciate it.
You bet.